Hello, hello. Good afternoon, everyone. Happy Friday to you all. Welcome. Happy summer 2022. We're in the month of June here in New York, and we're going to get up to 75 today. So hopefully we'll be creeping up, getting a little warmer for these next couple months, and hopefully you're enjoying your summer so far. If you're here live on Facebook, feel free to throw in the chat where you're joining us from, the state you're joining us from. That'd be perfect. And if you're here, on Clubhouse, you can definitely feel free to throw it in the chat as well. And looking forward to hearing you guys' feedback after our topic today. So feel free to share, throw a message in the chat if you're here on Clubhouse. And if you're on Facebook, you can join us live and post into the comments. So if you're not sure, if it's your first time here, just a little bit of background about today. This is Business Basics Friday, and I'm Safietou Russell, CEO and founder of SDR Consulting Inc. Business Basics Friday is a weekly session catered to providing valuable information to business owners. We have a variety of guest speakers that come in and share information to help educate you on the many areas of your business that you may need to manage. Just as a disclosure, this is strictly for education and information purposes. There's no client relationship developed here, and no legal advice being given. As far as my background, I've been in the industry 20 years, and I'm a CPA and enrolled agent, and also have a master's in taxation. SDR Consulting Inc. is a virtual firm based in New York, but we do service clients all over the US, and we mostly work with business owners providing startup and cleanup services and all that fun stuff in between. So as you have questions, like I mentioned, post them into the comments on Facebook Live or in the Clubhouse chat. We'll go over them at the end. And so it's my pleasure to introduce our guest speaker for today. Mekey Gabriel is a financial professional who will be covering the topic of financial planning for small business owners. So Mekey, thank you again for joining us today, and feel free to take it away.
Thank you so much for having me. Just a little bit about myself. I'm a securities licensed professional. I've been in the industry almost 30 years. I'm based out of Houston, Texas. I'm currently with a boutique wealth management firm. And for the majority of my career, I've dealt with ultra high net worth clientele. And the average wealthy family actually just has business entities for their everyday personal business. And we deal with a lot of family offices. So I'm so happy to get into this topic because I feel like it's one that the solo entrepreneur or the solo business owner really doesn't take time to utilize. So today we are going to talk about financial planning for business owners. So the very, very first thing, which I think is super, super important, especially since this is a CPA's room, we definitely don't want to pierce the corporate veil. So it's super important that we have separate business and personal everything. So one of the things to highlight, is why I chose to start with this, is because you absolutely should have separate personal and business goals. Financial planning basically takes a look at where you are today, and it incorporates those short-term and long-term financial goals, and it actually will spit out and tell you based on the data how you are going to arrive at those goals, or if you have a good chance of making sure that they come into fruition. So a short-term goal for your business is going to be completely different than a personal short or long-term goal that you may have. So I just wanted to start out that way because it is just super important that you make sure that you are carving out separate goals for yourself outside of your business, especially for the financial ones, because that is going to dictate how you move in each of those buckets. So the second thing that I wanted to talk about, which is a big one, is going to be financial planning. I'm so sorry. And guys, I do apologize. I was diagnosed with COVID, so I have a little bit of that brain fog. I usually don't need notes, but I have my notes here. It's retirement planning. Um, so retirement planning is super, super important, especially for the small business owner, because typically, if that is your main 9 to 5, your main source of income, you're not going to have a 401k or even think about an IRA. Why retirement planning is so important for you as a business owner is because you absolutely need to take advantage of the tax mitigation that is allowed for you in contributing to these plans. I always say the trifecta that anyone needs, regardless if you are a business owner or not, but especially for you business owners, is a financial advisor, certified financial planner, is a business attorney, depending on your line of business, and also a CPA. I always say that CPAs are worth their weight in gold because they are going to be able to work with you, look at that revenue, look at that income, determine which plan maybe works best for you, and also make sure that you can take advantage of any tax mitigation, savings, or deductions that you can. I will not get into the weeds with business structures, of course, but you can even set up a solo 401k. I don't have the numbers, but I'd be happy to provide them to anyone who wanted to know just how much you could put aside. So for those of you that are just making oodles and oodles of extra money in your solopreneurship's, in your business entities, yes, you actually can establish and structure your own 401k. You can even establish a Roth 401k, which means that you can put aside dollars that not only grow tax deferred, but you have tax-free distribution, which is awesome sauce. There is nothing like any other qualified account other than the Roth IRA. There is nothing that even comes close to the Roth IRA in terms of how well that is going to benefit you now and later. I will also say for those of you with little people that are helping with your business, you can actually establish custodial Roth IRAs. As long as a child has a source of income, so you can't pay them, unfortunately, for taking out the trash, but if you have a business, you can put dollars up until the annual limit into a custodial Roth IRA. How wonderful would that be if your 4-year-old helps you to helps with your marketing material or helps you to stuff envelopes or pass out flyers, and you're able to open up a baby Roth IRA for them that could grow and you could help them invest. So I love Roth IRAs. I could literally talk about them all day. But of course, that is not your only option. I just want to make sure that you're at least putting away dollars into some sort of a retirement account, even if it is one that you have to structure yourself. If you have employees, you can consider a simple IRA. There's a SEP IRA, which is where your trustee CPA would come in, because a lot of times with these qualified accounts for business owners, you are going to have to do some sort of I'm so sorry, that little brain fog again. You are going to have to do some sort of math with the methodology to determine just how much you could put aside on an annual basis based upon your earnings and your income. That is super, super important. Also, if you do have another 9 to 5, you may be restricted to certain amounts that you can put into qualified accounts by the IRS. So again, it's super important to come to your financial professional with all those numbers so that they can make sure that you don't run afoul of the IRS. This should absolutely be one of your short and long-term goals, your retirement. And also that leads me to one of the other items. You should absolutely have a succession plan. And in that, that may also mean that you need to be honest with yourself about when you want to step away from the business. That may look like you even selling the business. That may look like you selling out to your partner. That may look like you granting or blessing that business to a family member. You may also want to look at key man insurance if you are the pretty much the bread and butter of your business entity. Perhaps you need some key man insurance if something were to happen to you and you want that business to continue. Key man insurance basically states that it is insurance for the business, right? It can be utilized to buy another partner out in the event of a death. It is simply insurance in place to ensure that a huge liquidity event will occur should something happen to you in an untimely basis, so that your business will continue. All of these things are things that you should be thinking about in terms of what is going to happen to your business if you are no longer running the day-to-day. So I'd like for everyone, especially if you are a business owner, to just give some time to thinking about what is that really going to look like, because that is absolutely going to tie back into those retirement goals, especially those short and long-term goals, because you do need to start thinking about when it is that you would like to eventually step away and just have that business work for itself or live off of the residual income. Oh, just one second. Oh, COVID sucks, guys. Totally. I managed to avoid it all this time, but here we are. So the other part of what I wanted to mention that ties along, if you'll notice that all of these things are themed, right? We talked about your short-term and your long-term goals. We talked about creating a succession plan. which you're actually going to write out at times, because that may be something that is going to be presented in the event of your demise before, right? Because we don't know when that's going to happen, but it's definitely going to happen. The other thing that you need to think about is creating an estate plan. A lot of times business owners just don't think about their business as part of themselves or something that needs to be addressed in your estate plan. Number one, you should have an estate plan, absolutely, right? Regardless of your business. That includes making sure your IRA beneficiaries, your life insurance beneficiaries are up to date, any 403Bs, any annuities, any qualified accounts that you have, your bank accounts, all of these need to be accessible and absolutely need to be a part of your estate plan. So what is that going to look like? How does your business feature into that? Because what we don't want is for you not to have anything at all in writing, in which case then it's going to go to probate, which is bad, bad. All wills are sent to probate, but what happens for the bad, bad part is if you die what's called intestate, which is dying without a will in place, that is when the courts are going to come to a decision about your assets, about your business. And what if it is an illiquid business, right? What if it's the majority of real estate holdings? You really don't want for a court to have to make the choice to choose which assets to liquidate in order to pay estate taxes if that is necessary. So that is absolutely why all of this planning is important. Because again, if your business does not have a lot of liquidity or cash flow, right? But you do want it to continue, you're going to have to make some allowances this side of heaven to ensure that you have everything in place should something happen to you before you decide to walk away and or sell your business, to ensure its continuity. So that is super, super important and something that you do need to keep top of mind, right? So the other thing, which I'm pretty sure if you have our lovely host as someone who is handling your finances, you are already taking care of your taxes. But for those of you who don't, you need to get a good CPA in your life. You need to consult with a CPA sometimes before you launch, right? Because I always tell people you should start how you want to land. A lot of times you don't consult with a CPA, you don't consult with professionals, and by the time the money starts coming in, at times you've already lost out on that tax mitigation because you didn't have those consultations for first. So we absolutely need to normalize having those conversations with the CPAs, having those conversations, having those check-ins to make sure that you're doing everything that you should. Are you keeping track of the proper receipts? Or there are certain ways that you can do different things? The tax laws change so much that even in the financial space, we absolutely always refer to the professionals because we can only be good at so much. So I need you guys to make sure that you're utilizing your proper business structures as well. Sole proprietorships work, but sometimes they don't work. Is there another business structure that would benefit you tax wise? Because remember, a dollar saved is a dollar earned. Tax mitigation is absolutely key to maintaining as much liquidity and cash flow as you can. That is something absolutely that wealthy individuals do. They utilize their professionals to ensure that they don't have to pay any more tax to the IRS than absolutely necessary. Especially in this volatile market, if you are investing your assets, you will understand that sometimes just saving that dollar, you're automatically outperforming the S&P. So it is super, super important to make sure that you have the proper business structure to ensure that you are taking advantage of everything that the IRS affords you. I always say that the IRS loves business owners. I honestly think it was created for business owners. So absolutely make sure that you are doing your best. If there are any changes that you need to make, it's definitely better to do that sooner rather than later. So one of the other things is risk management, which is going to be super, super important. Make sure that if you need special types of insurance for your business, that you have those. Could somebody possibly sue you? I understand that a lot of these expenses are going to be high when you're first starting out. So again, you notice how all of this circles back. If you check with your trusty CPA, is there perhaps a way that you can deduct some of these expenses as legit expenses of your business? You have to have the business structure in place to do so. Like I said, some of your retirement, some of your planning. So this is why all of this is key in kind of keeping these individuals looped together, so that your professionals are always aware of what's going on. They're always aware of your short and long-term goals so that they can assist you in achieving them. And the final thing that I will say is you can absolutely have investment accounts in your business names. Let's just say that you are just killing it. You have all of this cash flow, you have all of this income. You don't need to pour it back into your business. You can absolutely open an investment account along with your personal and retirement accounts at a Charles, a Schwab, a TD Ameritrade, a Fidelity. Lots of people invest the money in their corporations, their partnerships, depending on, again, what those financial goals are. Let's just say that they're long-term goals, then you may want to invest in equities or ETFs or mutual funds that correspond with your risk tolerance as an investor. Maybe your business is a little bit more, um, you need to invest in more fixed income, right? So maybe it's just not going to be as risky as you would invest as an individual, but you absolutely can have investment accounts in your business name. Make sure that you know that you don't need to access those funds if you do choose to invest them in the market, right? Because look at the volatility that's going on right now for a number of reasons. That is not expected to abate anytime soon. Supply chain issues, COVID coming off of the end of a pandemic, the unfortunate war and aggression in Ukraine, inflation, recession looming, right? The great resignation, all of these things together are contributing to a very, very unsteady market. The average individual is a little fearful right now of what's going on. So, again, if you need short term funds, it may not possibly be the best place for you to park that money in cryptocurrencies or in the stock market, but you can absolutely still put those funds into a brokerage account and have what we call dry powder so that when these conditions do improve and you're ready to invest, you already have those funds set up and structured in that account. So those are the major things that I had that I wanted to make note of. And also, please make sure that you're tracking your future earnings or your projections. It is entirely possible to have a separate financial plan just for what you want to produce, what you want to create within your business, and then make that decision about how you want to purpose their dollars. I always like to say every single dollar that comes into play should have a home and should have a name, whether that is going to be to pay taxes, whether that is going to generate income, whether it's going to be put back in the business, whether it is going to be used to pay you a salary. And then from that, you're going to fund your retirement accounts. Everything should be purposed, including your business, because even Apple, Google, all of the big names, they all have budgets. You should have a budget within your business as well, not only for your business income, but for your salary. And also that is going to flow out to your personal accounts as well. So that is everything that I had prepared for today. I know that I said a lot and I'm probably speaking a little weird because of COVID, but financial planning is absolutely just as important for the business owner, if not more so, than the average person, simply because of what they can leave on the table.
Thank you, Mekey. That was a lot of information in a short period of time, but I appreciate you sharing that because all of it was important. And I appreciate you being here, being under the weather. So definitely thank you for taking the time out. You definitely didn't have to show up, and we appreciate you being here and taking that time out despite, going through COVID. So speedy recovery for sure.
Thank you.
I just want to definitely touch on a few points you made that stood out to me the most. And one of the last ones you said, where pretty much, every dollar has an assignment or has a home. And I think that a lot of people, we've been there. I've been there personally too. Your money just kind of flying out the door because there's no goal for it. There's no place for it to go. There's no designated assignment. And
Mhm.
and all those things you mentioned. Number one, the taxes. Like when you're a business owner, no one's taking the money out. So if you want to um, prepare and not owe a bunch of taxes and end up in that cycle, then you have to carve that money out. It's not all yours, unfortunately. It is what it is. So by
Agreed.
right, assigning that money to taxes, to savings, to your pay, and all of that was ideal because that variable spending, right, is where a lot of people are get into debt and they just don't know where their money's going because it's the $10 here, the $20 here that it gets lost, right? So I think that was very vital. As a business owner, when you may not be used to making money in this way, where you get it all up front and then you got to pay taxes later or pay quarterly. So it's
Mhm.
really important to follow that advice of assigning each dollar a home. I love that. Um, the other thing was, with the goal setting, by not having those goals, that also leads to frivolous spending because you're
Mhm,
thinking about today only. Maybe your business is seasonal where you have ebbs and flows. In the accounting industry, tax industry, of course, we have primary months that are busier than others. And
mhm,
so if we don't save up during the busier months for the slower months, then you get into a cash flow issue and you get into lending and high interest rates and all those different things. So planning and goal setting, and the future projections of income, like you mentioned, definitely vital. Um, you had mentioned the IRS and businesses. So they actually have a division for small business and self-employed individuals. So just for
mm.
us. So they
That's awesome.
absolutely, yes, have a catalog of different industries that they have specific audit guidelines for and things to look out for, statistics that are off in terms of percentages of expenses and so on. So yes,
Yeah.
it is beneficial to be in business. The tax law is written in a way that benefits business owners, but you also have to abide by the book. You want to definitely minimize taxes. That's perfectly legal. But when you start, doing evasion and things of that nature and making up numbers, trust me, it may take them some time, but you can be on that radar, and you don't want to be on that radar. Big
Mm-mm.
business or small business. So yes, they do have a division specifically for us business owners. With the retirement planning, these numbers change every year, but the SEP IRA, the solo 401k, roughly 58,000 or so is the max for 2022 in terms of like the
Mhm.
max you can put into some of those plans. And definitely if you have employees or don't, that can change which ones you can get. But I would definitely meet with a professional, like Mekey, to understand what your business specifically qualifies, to make sure all of those rules are met on like the retirement planning side and those rules,
Mhm.
and then coordinate with your tax accountant or CPA on the tax limitations, the tax deduction limitations. So there is a
Yes.
hand in hand, there's definitely a hand in hand correlation between the two. And some people do manage it on their own. But if you're not in the profession of retirement planning, I just recommend to get a professional, just like as far
Get a
as
professional.
get a
Makes it so
professional.
much easier,
It
right?
does. It does. And sometimes you may save in the front end, but you end up paying on the back end. So
Exactly.
it's better to get it done in the beginning. And then the last thing is you had mentioned I forgot the exact quote, but you pretty much said start the way you want to land. Or
Start how you want to land.
yes, love that.
Absolutely.
Love that. So,
Mhm.
when you're looking to go into business, if you aren't already, you want to make sure you have the funds to set it up properly, right?
Mhm.
And everyone's situation is different, especially coming out of COVID. Some people lost their, jobs and just had to make a shift and just figure it out, right? So I get it. You may have just haphazardly, started selling something and then it blew up. But where
Mhm.
possible, and even if you're at that phase, take a step back, go through the proper steps. Is this the right structure, like you mentioned? Is
Mhm.
are my accounts separated? Do I have business accounts? Do I know how I'm taxed? Do I know how I pay myself? All those things. I prefer you doing for the beginning, coordinate with your professionals, your financial planner, your CPA, accountant, in some cases, your insurance, broker, et cetera, depending on what
Mhm.
insurance you may need. Get all those things done on the front end, make the investments up front. If you can't and you've already started, just backtrack, get it cleaned up so that you can not be 10 years down the road and everything's a mess. Makes sense.
Totally agree. And we do need to normalize that. So, for example, my son just graduated and he said, Mom, I want to stream. So I'm like, okay, but I'm going to support him. So we are having a discussion with an incorporator about establishing his LLC. I want him to ask questions. He has to come up with the name. Because, yes, he's like, oh, Mom, it's just YouTube. I said, no, it's a business. So you're going to learn about a business. So,
Yes.
absolutely. So thank you so much for that recap, because we do need to normalize. You do need to check with your professionals because it can cost you so much on the back end,
Yeah.
or even worse. I don't go to jail for anybody. So you need to have your
Agreed.
things in order.
Agreed. Yeah, it's interesting because as a business consultant and also tax accountant and uh, bookkeeper, I come across just craziness, right? So as you mentioned, not going to jail, people have to understand that CPAs, financial professionals, there's licenses on the line.
Mhm.
So when they're working with you, if things are not in line and things don't look right, they should step away because it's not worth, all the years they've put into their career for one person, right?
Nope.
When you're working with a professional, especially like with tax preparation, if that professional isn't signing off on your return as a preparer, something's wrong there. If they're preparing
Mhm.
your return but marking it as self-prepared, that's because they don't want the responsibility of that return. And when you're looking for a professional, you want to ensure they have some type of credentials or experience, and that when you get that return, you review that return because your name is on it, you sign off on it regardless of what is on there. And if you don't
Absolutely.
understand, then you need to ask questions. And if you can't get questions answered, then you should choose a different professional. And
Absolutely, and that is key. Thank you so much for saying that. And wives, I've heard that too. Well, I was just signing. You're equally culpable because your name is on that return. Absolutely.
yes, yes, when you file jointly, joint and several liability, which means pretty much even if you separate later on, those years that you file joint, you're liable for the whole amount. No 50-50, whatever the arrangement is internally, doesn't matter. The IRS wants 100%.
Yes, I
And they'll
love to
get it.
scare people because then they call, they do what they need to do. Absolutely.
It's much, it could be scary information, but it's much scarier dealing with the IRS or state than to get ahead of it and work with a professional to resolve it. The states are just as aggressive. New York State, one of the top ones on the list there. So
I've heard
um
about y'all. Yeah.
so I don't work for the state or the IRS, but our goal is to help you stay out of their hairs, do things by the book, and in the end, you can have that financial plan and not have tax issues that are gonna dive into your brokerage accounts and your retirement plan accounts, because they can. So the two definitely do go hand in hand, and so you want to be compliant on both ends. The estate planning, like you mentioned, big thing. Most business owners are in the business. So day-to-day operations, they're so consumed with that they're not taking a step back and saying, you know what, I can't do this forever.
Mhm.
So what is the plan? Right? What happens, God forbid, if I get sick, if I have COVID and I'm 2 weeks I'm out of commission, what happens with my business? And it's hard to think about, but it's reality. And so who do you have in place? Who can you trust? What professionals do you have in place to help get things in order? Really, really, really key information. So like I said, you shared a lot. All those main points were on point. And if anyone does have questions, feel free to go ahead and post them in the Clubhouse chat or in the Facebook comments. We're going to wrap up in a few minutes, but I think that as a recap, this was great. And I definitely recommend everyone who's in business take a step back, get out of the weeds of your work for a minute and look at these things. Look at the finances. Do you have finances in place? Do you have bookkeeping in place for your business? If not, let's start there, because that determines, the other things. Financial projections, tax planning, retirement plans, all are based on your numbers. So if you don't know your numbers, that's square one, right? Um, and
Mhm.
um, and then from there you go from there. So bookkeeping, taxes, entity, retirement planning, so on and so forth. They're all interrelated.
It is. And it's so funny because I hear people say, well, I Googled that, but you can't Google what you don't know.
Right.
And your situation is very specific depending on your state, depending on your business.
Yes.
So yes, I do think we do need to just to normalize having these conversations and consultations just to make sure that you're going about the right way.
Yes.
Because yes, I've seen some horror stories, sadly, and some things could be so easily avoidable. And it's to your benefit because you get to sleep better at night. I always tell people, share the burden,
Mm.
utilize your professionals, put that burden on them, let them do their job, and you sleep well knowing, oh, I'm calling Mekey because wait a minute. Right, absolutely. That's what I do. That's what you do. So
Yes.
absolutely, that's what I call it. Share that burden, give that burden up and be free
So
and do other
true.
things.
And it's great to work with a professional who does get you and who can empathize, right? And and it's funny when you say share the burden, because I've, personally dealt with clients with tax debt issues, and I'm more worried about it than them. And I'm like, wait a minute, this is wait a minute, why am
It's
I
on you,
stressed
sis.
out?
Yeah.
Why am I stressed out? This is their responsibility. I can convey what needs to be done, but if they don't want to do it, but yeah, you get involved, when you
Yes.
when you're invested, in your clients, you get involved. And so definitely the
Mhm.
burden is shifted, but that's what we're trained for, right? And
Absolutely.
we know how to get it resolved as long as you're cooperative. That's the main thing. If you set a financial goal for someone and they just continue spending out the wazoo, well, right,
That's when I'm like, sign here, sign here. We met
right,
here. We
right,
discussed this. Don't leave your heirs. Don't come at me.
right,
You okay? We're
right,
good. Because
right,
yes, absolutely. But
yeah.
I think those continued conversations, if you're not indoctrinated into that, are definitely going to be key.
Mm,
And you
mm,
do need those people. I call it your clique. You do need those arsenals in your clique to help you achieve those goals. So
mhm.
absolutely. Mhm.
Perfect, perfect. All right, Miki. So we don't see any questions. I think you were very thorough, so that's great.
Awesome.
So definitely thank you again for everyone who joined us on this Business Basics Friday. This, live session will be available on the main page, SDR Consulting on Facebook, and then it will be posted onto the podcast in about a week or two for SDR Business Basics. So I'm going to close out just sharing, my information for anyone joining late, and then Miki, I'll go ahead and have you share your info, how people can reach out to you and connect with you. So Safi Russell, founder and CEO of SDR Consulting Inc., where we specialize in working with business owners, helping them with the startup phase as well as cleanup. So that consists of business consulting, bookkeeping, tax preparation and planning, and also tax resolution for those who've gotten into trouble with the IRS or state. We also working with a lot of individuals in the mental health profession and kind of specializing in that area. So definitely connect with us on social media at SDR Consulting or online at sdrconsultinginc.com, or you can schedule a free 15-minute intro call by calling 516-255-6603. And Miki, you can go ahead and share your information.
Awesome. Well, you can reach me on Clubhouse. Unfortunately, the firm that I'm with has a really high minimum, so I do just love to provide information. I do host a space on Clubhouse every Sunday at 6 o'clock p.m. Central called Wealth Financial Flowers. You can email me at wealthfinancialflowers@gmail.com or on Instagram. And I look forward to hosting a space with you in a couple of Sundays where we're going to
Yes.
tackle for you novice, just getting into it, what type of business structures? Because I love business structures. I love structures. I love taking advantage of tax mitigation, and I look forward to you. And wow, I heard that master's in taxation. So woohoo, you're the real deal there. So yeah, that's awesome.
Appreciate it. I'm
Thank
looking
you.
forward to joining you that Sunday. So definitely look out for that information as far as the date. I don't have it in front of me, but it's July. I know it's July and it's a
It's in
Sunday.
July. Me too.
Yeah,
And
it's
thank
just
you so much for this because I love to talk about planning. I love to talk about investing. I love to talk about retirement planning, closing the racial wealth gap, helping people achieve their level of financial freedom. So
great.
thank you so much for this space and this opportunity. I super appreciate it.
Definitely, definitely. Thanks again for your time and for being willing to share freely. It's definitely not common. So we appreciate it when we can
Mhm.
find it. I like to share as well, and we'll definitely continue to collaborate. All right.
Awesome.
All
Thank
right,
you.
everyone. So have a great rest of your weekend. Stay safe and enjoy your summer. And we'll be back not next Friday because that is, I believe, the 1st, July 1st, heading into
Oh,
4th of
wow.
July weekend already. Yes. So we will be back the
Yes.
following week. And so everyone enjoy 12 o'clock Eastern, Basic Business Friday. Share with a friend. And we'll talk to you soon. Take care. Bye bye.
Okay. Bye bye.